Hi everyone, I'm Ann Sun with Rain Realty. We are the Solis Estates Group. I'm here with my team today.
Brett Stokes.
And our guest speaker.
Hi, I'm Julie Tran from Peak Mortgage.
So we gathered here today to help everyone gain some insight as into, how to get a mortgage in this hot market right now. And Julie is one of the best. That's why we invited her on, and hopefully she could shed some wisdom on us. Right?
Thank you for having me. It's a pleasure being here today.
Thank you. So Julie, before we get into it, I just wanted to ask you, what do you think is the driving force in this market right now? I mean, the market's super hot. Everybody wants to get in. All of a sudden, it seems like these buyers are coming out from nowhere. So what's going on?
Yeah, it's definitely a lot more, it's been a lot more busier than we expected it to be for sure. And I think a couple of reasons. One of the main driving forces, I think, is because of the historic low rates. Rates are anywhere from 1.7%, which is the lowest it's ever been, at least in the 12 years that I've been doing it. So I think that's definitely one of the driving forces. Another one is essentially, I think it's due to the pandemic, realistically. I mean, people are working from home a lot more. People with kids, like I have 4 kids that live with me as well. We all have some kids, and we want our space. So I think that's a big driving force as well, because now people are looking to either move over to the suburbs to get more square footage in a property, and just to have your own space.
That's true. So I've been running into a lot of different clients coming from public marketing or even referrals, and half of them haven't even seen a mortgage broker yet, but they already started shopping. The other half, they said they've talked to the banks already pre-approved them. And my question to you is, what's the difference of going with a mortgage broker versus going with a bank?
And I've been doing this for 12 years, and I've been actually working at the bank for many years as well. And I consider myself as a personal shopper. We all like shopping here.
Mm-hmm.
Essentially, what I would do is I work for your client. So I would go out to find the best terms, the best rates for your clients without them having to do everything. So I'll give you an example. If they, for example, go to the bank and work with a mortgage specialist at the bank, they may not necessarily fit within the bank's program. What they would then have to do if they got declined at the bank, they would have to take their application, start the process all over again, and start applying at different banks. Whereas I do the job for them, less stress for them, and I find the best solutions for them, essentially.
Is it still a myth that it hurts your credit if I go bank to bank?
Yeah, so that's another thing to think about as well. If you're going on your own and you're applying at the bank, and for some reason you get declined, and you go to another bank and you get declined, by pulling many credit scores, yes, it does affect a little bit. So I do the work for you where you don't have to pull up the credit score. So we pull up your credit score once, and we shop around with that one credit report.
Now, since we're talking about credit, what are some things that you would advise, say, a first-time home buyer or someone who's wanting to get into the market to prep?
Yeah, prepping is so important, especially with today's market. How to prep essentially is, if you're a first-time home buyer and you've never checked your credit score, I would always check your credit score. Even for someone that is not looking for a mortgage, definitely check your credit score, because that's essentially what gets you approved, is how good your credit score is. It's your financial resume. You want to make sure that you don't have any collection items or things on there that you may not necessarily know. And I think I have a lot of clients who will apply for a mortgage, and when I pull up their credit bureau, they're like, whoa, what is this? I don't even know. I've never seen this on my credit bureau before. So it's definitely good to pull it up and see what your credit score is.
Or that one credit card you had when you were 19 and you didn't know that was still on there that has $5 owing.
Yeah, exactly. And that really harms. And it takes 7 years to actually get a collection item out of your credit score. So by doing something without realizing it, it's going to take you 7 years history just to get away from that credit score.
Yeah, just
and
like
even,
a criminal record.
Yeah. And even with parking tickets, you may not know that the city parking tickets, if you don't pay for them, they actually go on your credit bureau and becomes a collection item. And I've had clients who have great income, have enough down payment, and because of that parking ticket, they're not able to get approved.
Wow.
Now, what about in the case where people think, oh, well, if I pull my own credit, that's going to hurt my credit score?
No, if you pull your own credit score, it actually doesn't hurt. It's only if you're applying for credit is when sometimes it will go on your credit bureau as a credit hit.
Because I thought it was one free credit check a year.
Yeah, no, it doesn't. If you're pulling it on your own, no, it doesn't affect your credit score.
Now, piggybacking on the individuals who shop for banks on their own, and let's say when they do get red flag, how long are they red flag for? Like how long before they can actually start the application again?
I wouldn't necessarily it's been red flag, but they will check. Like every time I pull out credit bureau for a client, I see where you actually have gone, all your credit history. If you've done it 4 or 5 times, what it causes a little bit of a concern. So like with the red flag you're talking about, to a lender to be like, okay, why are you applying at so many different banks? Normally, if you applied at one bank, you've got approved, you're not going to necessarily go out and apply at another bank, right? So it does cause a red flag for sure. So I would, again, working with a mortgage broker, we pull your credit bureau once. If it doesn't get approved at one particular bank, we go and shop with the same credit report, so it doesn't look like you pulled it so many times. And they may not know behind the scenes that we're applying at multiple banks.
What's the bank typically? What are they looking for in terms of credit score?
Your bare minimum would have to be about 680 credit score. That's pretty on the low side. An average person would be about mid sevens. Somebody that's really good would be the high eights.
And I just wanted to ask you another question because I know that you know this. People that have had declared bankruptcy, they've been, having really bad credit. Does that mean that they're completely out of the game? They can't get a mortgage?
Not necessarily, and we do see a lot of times, there's always got to be explanations for it, right? There's ways of mitigating the reason, and somebody could have gone bankrupt because it could have been a divorce, or it could have been maybe they had a corporation and it didn't work out. So as long as we can explain what happened, and it's not just your credit score, of course, or your credit bureau, there's lots of other factors on why you would get approved for a mortgage. So for people who have gone bankrupt, I wouldn't say no. There's always ways of doing things, and as long as we can explain it. If you're being irresponsible, then probably not. But if it's due to something and we can actually mitigate it, and that's why it's so important to know who you're working with, right? Because the way I would structure your application would be completely different than the way somebody else that maybe with not as much experience would structure your application.
I actually had a question as far as prep is concerned. Now, down payment. What kind of down payment would you need? Because that's part of the prep, right? Coming up with the money to actually put the down payment on the home.
For sure. Your minimum down payment for if you're purchasing a property that's $500,000 and under is 5%. If you get above the $500,000 to $1 million mark, it would be 10% on the remainder. So your bare minimum would be 5% on anything under $500,000. And you can use your RSPs towards the down payment as well. A lot of people don't realize that being a first-time home buyers, you're able to take up to $35,000 out of your RSPs.
When do you have to start paying the RSP back though?
You have the year after you purchase, you have 15 years to pay it back. And what it means by paying back is you're not paying the government back by any means. You're actually just putting money into your RSPs. Yeah.
In addition to that, how much income do you need to qualify for a certain mortgage?
It really depends because it's not just your income necessarily, but it's going to depend if you have any other liabilities like a car loan or a credit card debt. So everyone's situation is so different and the type of income we use is so different. So to know how much it is I can qualify, talk to myself. I can go through your application for you because everyone's situation is so different.
Can you explain to us what the difference of a pre-approval and a firm approval is?
Yeah, a lot of people think that when they get pre-approval, they are approved and they can just go out and do a cash offer. That's not the case. When we do a pre-approval, what we're doing is we're looking at your specific financial situation at that time and we let you know, okay, this is how much you're able to afford. The firm approval happens after you work with these lovely realtors. When you find a beautiful home, you would then come back to me to get a firm approval because a firm approval doesn't happen until you actually have an accepted offer or a property that you're wanting to purchase in place. We do have to send those to the lenders and they have to acknowledge that they're okay with the property you're purchasing. Because what can happen sometimes if, financially you're great, your credit history is great, you have a great down payment, but you go out and buy a property that the bank is just not fond of, at that time you would get declined.
And that could typically be an ex-grow op, it could be something that's not in great condition,
Correct.
Barely livable.
Correct.
Okay.
Yeah, absolutely.
And then in regards to, I've seen some people, they're very confident once they get the pre-approval, they'll go out and write offers. But what's the mistake of doing that if they write a cash offer saying, hey, I've been pre-approved, cash offer to compete with the market? Like what's wrong with that?
We're finding that a lot more now than before. I feel like you have maybe one day if you're lucky, but everything's been cash offer just to get in the market. And I say that's not a terrible way to go about it, but you have to plan in advance. So you have to talk to the bank first or whoever you're dealing with first to make sure that you can afford that property, number one. But you also, I think the big key thing is you got to also be prepared to get private financing if it ever came down to it, right? Because realistically, even though it's a cash offer, no one has the cash to pay off the entire property. So what I always give my clients advice is that if you are willing to go in a cash offer, I could be like, I think you're going to get approved based on what you've given me, but I really don't know until I submit your application into the lender. As long as you're willing to take a private financing, even though the rates are a little bit higher, it's more of a guaranteed approval. If the clients are prepared to do that, then by all means, you can do a cash offer.
I'm actually gonna go a little rogue for a second.
Go for it.
Because marijuana is now legalized, and how many people are now putting grow-ups in their home? In the next few years, I'm telling you how many homes are gonna be grow-ups is gonna be remarkable. Ex-grow-ups even. So my question is, what is going to make you qualified to buy that home? It could be in great condition, could have been remediated, could have been fixed. With that being on the record for the home, what's going to change on your side? How much more work is this going to be for me and you?
Yeah, it's going to be a little bit more difficult. There is a stigma still within the bank side if it is a previous grow-up, no matter how remediated it is, whether it's been turned down to the studs and it's been fully renovated. There's still a stigma on it. It's not that we don't lend on it at all. We will lend to it based on the covenant who is the borrower. And a lot of times you need a bigger down payment. You need about 35% as a down payment versus your average 20% as a down payment.
Because how many of those are we going to see?
Yeah.
Right? Like everyone's like, oh, I get my 3-4 plants. Yeah. And now it gets,
Yeah, and maybe because of the whole, now that it's legalized, it might not be such a stigma anymore. So we're just not there at the bank's level right now.
Maybe
at this
in
point in time. Yeah, but it's not a no as long as you have a bigger down payment and we can show that, if something was to happen to the property, you're able to afford, fixing it or whatnot.
Fair enough.
Yeah.
Who is lending on a previous grow-up now?
There's a few. I Bank of Montreal is one of them that I've known and that I've gotten, and I'm only speaking from experience, that I've gotten approved before. But again, it's not, they don't advertise it.
It's not set in stone.
Yeah, it's not set in stone. It really just depends on who's borrowing it. It depends on the property itself, how long it's been remediated. It depends on how the appraisal looks like.
I kind of want to go into, I know this is not our area here, but we do have lots of clients that do come back to us that just bought their house about 2 years ago, and because of the major interest rate drop, they're going, well, I want to refinance. What are the differences in penalties? Is it worth it? How do they determine that?
It depends. So and that's what you definitely want to talk to us is we do it. I would do a calculation essentially. So I would say, okay, go find out what your penalty is, and if it makes sense for your specific situation, then definitely do the refinance. So we do a plan before you actually go and apply for a mortgage to pay it off. I always that would be my first question. What is your penalty? And number one, does it make sense for you? Because I'm not going to do something unless it actually makes sense for your specific situation. But it is a great time. And somebody that's had, say, a variable rate even, right? The interest penalty on it is always 3 months interest penalty. And because the discounts now on the variable rates are a lot more significant than what it used to be, it might be a good time to do a refinance.
If you were getting a mortgage, would you go for variable or fixed?
That's the golden question everyone asks. You know what? There's not one that's better than the other. It depends on your specific situation. So for myself, the reason why I would choose a variable rate is because I might be buying property and I want to sell it in 2 years, right? The penalty on a variable rate is a lot less than on a fixed rate. I'm also a lot more risk. I can take the risk because if the rates go up, I can still afford my payments every month. For someone that's a first-time home buyer, I may not necessarily suggest a variable rate because they want to know exactly what their payments are. They don't have the room to move in case the rates go up and their payments go up. So every situation is completely different. I don't think one is better than the other. I think I would go by your specific situation.
In addition to the interest rates, what do you think, or how do you feel the forecast is as far as interest rates right now? They're going to go up, or
they've gone up? Like the fixed rates have gone up in the last week, actually, quite a bit, and it was a little bit unexpected, I would say. So everybody was rushing in to get in on their applications because the rates have gone up. But as far as the variable rates, I don't think it's going to change at least in the next 2 years until the end of 2022 is what they're forecasting. However, fixed rates.
I think we have a question.
Oh, we do.
Yeah, so the 604 realtor asked, does it make a difference if the buyer have pictures and documentation of the grow up and how it was done? For example, if it was done legally and to building code.
Yeah, they will definitely need all of that for sure. Anytime that somebody's even listing a remediated grow up, they should have all the occupancy permits. They should have all of the information, the environmental testing as well. So it definitely does help the bank when you're getting approved because that is a mandatory that the banks will ask for.
So it's advisable that the listing agent do document everything properly, PDS, the feature sheets, everything is included. Throw in the remediation report in there if you can, right?
Yeah, so as a realtor, that's great.
As organized as you can would make your life easier.
Yeah, the more information and the better comfort level we get the banks to do it, then they'll do it.
Now, Julie, you and I, we're both, sorry guys, but we're Vietnamese. So we have a lot of common problems that we encounter. So with our community, we have a lot of people that come to us that has a lot of cash, but the income's just not really there. Like, does that mean that they just can't qualify for anything bigger than what the income says that they're approved for, or what are their options?
Well, with cash, especially, you're probably in a business that has cash, right? So,
Small business owner.
exactly. So what we normally do with those is there's programs where we will take the last 6 months of your bank deposits, annualize it, and that becomes your income, right? So that's and that's on the B side. A side, banks don't do that, but there are programs where it helps clients, and we know that it could be any cash business that they do, and there's a lot of them. So as long as they're depositing the cash into their accounts, we will take 6 months deposits and use that as income.
So they're not a write-off completely.
No, they're definitely.
I was gonna say their plants are doing well. They want to get into the market.
Sometimes it's better. Yeah, sometimes it's better with those type of programs, even for than an average person who makes a salary income. Because the other is way more.
Right. And can you go back a little bit into the first-time home buyers? What's the difference between putting something under 20% down payment and then putting more in? Like, what are the perks? Does that just mean that your mortgage payments are less, or what's the benefit of it?
Yeah, if you can come up with 20%, which is very difficult in BC because health prices are so expensive, but if you can come up with 20%, by all means, yes, you definitely want to do 20%. That way, you're not paying the mortgage default premium that you would pay if you're putting less than 20%. The more you put down doesn't necessarily mean it's going to change the approval. Like sometimes you can get approved for 80% financing, so they don't want to put the additional down payment because they want to save that for mortgage payments or have a buffer at the end. But if you're able to put more down, by all means, yeah, it definitely saves you interest and it helps you with your monthly costs as well.
What about CMHC? Now, a lot of people don't know what that is and they're not aware.
Yeah, CMHC, there's a couple, it's called mortgage default insurance. So essentially, anytime you put less than 20% down, you do get charged with the mortgage default insurance, depending on how much you put down. So if you put 5%, it's a little bit more, 10, 15, the premiums go down a little bit more. And that gets added to your mortgage, so it's not like you actually have to pay all of that up front.
Does that not look like a debt though? Meaning that like the CMHC, does it not kind of look like a bit of like a loan and affect you in the pre-approval process as well? Because I had a client where first-time home buyers, great job, good income, but if he used the CMHC, all of a sudden his pre-approval value went down because the CMHC, say the incentive, was now applied as a loan.
The premium does get added to the mortgage, which means that you're borrowing a higher amount.
Okay.
Yeah, it's not a liability by any means. Yes and no, but yeah. So say your insurance premium is $10,000, that will get added onto your mortgage. So instead of $400,000 that you're borrowing, you're now borrowing $410,000.
Okay. So,
but that little bit actually won't make
significant.
Yeah.
Make a significant.
Yeah.
Damage.
And especially applying for a high ratio mortgage, they know that that's a fee that they have. So they might be okay if your ratios are a little bit higher because now you're putting a fee on the ratio. Yeah.
Does a stress test add to that as well, or is that something entirely different?
Yeah, the stress test came out, I don't even know how many years ago, but essentially what it is you have to be qualified at a certain rate, so which is right now 4.79, or your current rate plus 2%, whichever is the greater. Because rates are so low right now, so if you took your rate, say 1.8%, and you add 2%, you're only at 3.8, so you have to still be qualified at the higher rate, which is 4.79. And that, essentially is just making sure that people who, because we're in such a low market rate right now, they want to make sure that if the rates go up in the next couple of years, which it probably will go up, that people can still afford their mortgage. Yeah. So whether you're doing 5% down or you're doing 20% down, you still have to get qualified at the qualified rate.
Right.
That's great to know.
Yeah. And I think I did have a client that can you tell us a little bit more about this? I had a client that bought a house, a few years back, and he's looking to sell now, and he's trying to see if it's worth it with the profit that he's making. He said something about, I have to pay the government back for the money that they lent to me for my mortgage. Like, what is that all about? Do you know what he's talking about?
It could be, is it the 5% that he borrowed maybe from the insurance?
I think he put in a certain amount and the government matched it, and then so now he has to pay back the government, some of his whatever equity he's making.
Yeah, that could have been a program that I think we have about maybe 2 years ago where they will match your down payment if you needed to, just to get up to that amount. So that could be what he's talking about.
Right.
Yeah. So once you sell your property, you do have to pay the government back on what you borrowed from them. And if it's the new, it depends on which program he's in. But if it's the new program, there's a percentage that CMHC will actually take if you borrow that 5% for the extra for down payment. Yeah. So it depends on which program and how long you got it.
Right. So, and do you know if they calculate the payment back to the government? Because I think the interest is on the profit, right?
Yeah.
So
there's a certain percentage of your profit that you have to give back to CMHC if you decide to borrow. And that program actually is very new. It's only been around for maybe 6 months, less than a year for sure.
Oh wow.
Yeah. So essentially what it is, if you have 5% down payment and you can borrow up to another 5% depending on your income, etc. They will take a certain net profit from your proceeds essentially when you sell your property. So it's kind of like the fine print of it, which may not work for everybody, but there's also, so to give back some of your income or your profit from it may not be suitable for everybody,
So what's your advice to us when we have new clients coming through now? Let's say today onwards, we have a new client that comes through. What's the first thing that we should be advising them to do before we start any of the research for them?
A pre-approval. Like whether it's a first-time home buyers or someone that's been purchasing forever, pre-approval is so key, because what that will do is that will give us enough time to collect all the documents, data, so that they're prepared for when you make an offer. I definitely would recommend a pre-approval, and then that lets you know that the clients are serious, because I obviously get to see a lot of their financial information. So if they're not serious about purchasing, they're not going to give me their financial information. So that saves you guys a lot of time.
And is it true that some banks will hold the interest rates that they've been pre-approved for?
Some banks, I think you have up to about 130 days at some banks to hold a pre-approval rate. What we normally do on the broker channel is we don't necessarily hold rates, but what we do is we take a look, and again, we're shopping. Once you have an accepted offer, we would then go and shop to see who has the best rates at that time, because your pre-approval rates is not going to be as good as your actual market rates, because when you're doing a pre-approval, they have to hold it anywhere from 120 to 130 days. They're not going to give you the best rate because they're holding it for such a long period of time. Whereas if you have an accepted offer, we know you're closing in 3 weeks, that's when we can shop for the best rates for you possible.
Great. Do we have other questions we'd like to interrogate Julie about?
Bring it on.
Well, I think that's it for us today. Julie, thank you so much for your info and insights. It was very educational. If there's anything that we've missed at all, if there's anything that anyone would like to inquire about, we'll leave Julie's name and number at the end of the video. So if anyone wants to give her a call, you're welcome to do so. After that, we'll take over and we'll help you guide you through the process. Thank you so much.
Awesome. Thank you for
That was
having me.
cool.
Good luck out
Learned
there.
lots.
Our information will be at the end of this video, so feel free to call us. Thank you for watching. Oh, we got lots of hearts on there. All right, thanks guys. We're gonna announce contest winners later. I know we kind of went off the grid there, but we're gonna come back and we're gonna announce contest winners for some of the prize giveaways. Thank you for tuning in, and we hope to come back and bring you guys another segment of Q&A next time. Bye.
Bye.